And welcome to the Treasury Committee evidence session about access to finance for small and medium-sized enterprises. We're very pleased today to have the Economic Secretary to the Treasury giving us evidence reflecting on what we've heard so far in our inquiry. And could I ask you to introduce yourself for the record and your official as well?
Thank you, Madam Chair. My name is Afolami. I'm Economic Secretary to the Treasury, and I'm with Alanna Barber, who is
Deputy Director of Banking and Credit at the Treasury.
Okay.
I didn't want to get her title wrong.
Thank you very much. Before we get into the topic of small and medium-sized businesses' access to finance, I just wanted to ask you a few questions, if I may, because you wrote to us last week with your response to our report on the Edinburgh reforms, and we'd sent you a fairly chunky report in December. Actually, I think it was to your predecessor, with 18 conclusions and recommendations. And in response, we've published the 2-page letter that we received in response. And we just wondered whether, that's your style, whether you think that's the right way that you should respond to 18 recommendations in a report from us. And you also said, I disagree with a number of the report's conclusions, some of which appear to be inconsistent, but the letter didn't really have enough space to elaborate on those.
Well, thank you for that, Madam Chair, and I'm happy if it would please you and the committee to come back with more detail. But I thought that in the interests of responding quickly, it was better to get the response back. But if you would like more detail, then we can come back with more detail on each of the conclusions. If you would like.
I don't think we're asking for anything at all unreasonable here, because it is generally accepted practice that when select committees come up with reports and they write a range of recommendations, that the government then responds to each and every conclusion in that select committee report. So what I'm hearing you say is that you have now agreed to send us a further response
I'm happy to
our Edinburgh Reforms
report.
And I'm going to leave it there, and we hope that will answer some of the further questions I had on that report. Thank you very much. Now, just moving on then to the subject of access to finance for small and medium-sized businesses. You've been in post now for a few months, and I just wondered what your general feeling was about access to finance for these businesses in the UK at the moment.
It's a good question. It's a very interesting one, and I've enjoyed thinking about it and working on it. I'd say two main things. The first is that the way when I say we, I mean as a country more broadly, have often thought about finance for small businesses is always about debt finance. And we've often thought about it in terms of banks providing debt to small businesses to grow and expand and do the things that we want them to do. And of course, that's absolutely critical. But in addition, over the last few years, because of broader changes in the macroeconomy, particularly around tech, particularly around the growth of service industries, the need for equity finance has grown and grown and grown. And so I think that we need to think about equity finance a bit more as a country, as a parliament, as government, and more broadly in the industry, and recognise that change. And then the second thing I would say is that the growth of provision of finance away from what you describe as sort of the big five sort of traditional retail banks towards either small and mid-sized banks or indeed alternative lenders has been pretty significant over the last few years. It's an open question that one could debate and discuss as to whether that's inherently good or bad. I don't think it is inherently either one of those things, but more diversity, more competition is something that the government's had as a long-standing policy over several years in the banking sector. I think that should also apply to lending for small and medium-sized businesses. So I would recognise that as well. And I suppose the third thing, just to conclude, is simply that there have been gaps for the provision of finance, whether it be debt or equity finance, for small and medium-sized businesses. That's where the British Business Bank and various things that sit under the British Business Bank come in. And I think that the government has tried to strike the difficult balance between not wanting to intervene unduly in ways that distort the market in an unhelpful way, but at the same time fill gaps where they're necessary. And that's why the British Business Bank is a very important institution doing important work, supporting almost 100,000 businesses since its establishment.
Thank you. And we have heard from them during the course of the inquiry, and I'm sure there will be questions today. But for you personally this year, as a priority in this area, what are you tasking Treasury officials to work on?
So the main thing that's important to me in this area is very simple, which is more equity and debt finance being provided affordably to small and medium-sized businesses that need them, and to clearing off where it can make a difference, clearing off unnecessary regulatory burdens that those financial institutions feel prevents them in certain instances from doing those things. But doing that very mindfully of the broader macroprudential difficulties around that the banks in particular have to live with, and they have to live with quite rightly, because we have to operate a very rigorous, robust framework around capital requirements and various other things, but recognising in areas, for example, like money laundering regulations, where they appear to be too onerous in certain instances that are putting off financial institutions from lending for certain types of small businesses. In those instances, for example, what we need to do is make it simpler and easier to provide finance to businesses that deserve and need that money. I don't say this out of some ideological predisposition, but I say it because if small and medium-sized businesses that are the lion's share of the businesses in this country, it's where most employment is, it's where most growth comes from, if they don't have the access to finance that they need, whether it be debt or equity finance, then our economy will not grow. So it is a clear public and economic good that happens.
We wholeheartedly endorse where you want to get to. I think my question was really more about what are you tasking your officials to actually do this year that would make a difference to that goal?
It's, as I'd say, primarily it's the regulatory aspect, and to make sure that we are not we are taking away all unnecessary barriers that financial institutions have or feel that they have, that prevents them from lending where lending would serve an economic and good purpose for those companies.
So these are independent regulators, but what are Treasury officials and yourself as the Minister asking? And obviously they would have to then decide independently to do those things. So what could we expect them to be doing in 2024 that we haven't yet seen?
Well, I mentioned the money laundering regulations, that they are very important in relation to provision of accounts for businesses, and those need to be improved, and we'll be consulting on those as soon as we possibly can.
So that's one thing.
Is
there anything else you want to highlight, or is that the one
I'd say that's the main thing I want to highlight in this regard.
Okay. Are there any other things that we should be aware of that we haven't yet been told about, that you'll be asking your officials to do to change so that we can achieve the vision that you set out?
Well, I mean, it's in a slightly different context, but I sort of only mentioned it tangentially, but the work that we announced, that the Chancellor announced at the autumn statement around the growth fund that is being worked on presently, both within Treasury and with a lot of work with Downing Street and other departments as well. The growth fund will provide significant opportunities for small businesses to access finance, again, equity finance, and that's something that we're working on very hard at the moment.
On the subject of debt finance, though, which often is more appropriate for the smaller businesses and the growing medium-sized businesses, we last looked at this as a committee back in 2018, and we've heard from the Impact Investing Institute that the success rates for these businesses seeking finance has now dropped from 80% success back in 2018 to 50% today, which suggests that actually since 2018 the climate has gone backwards. Do you accept that characterisation?
Well, the figures as you set them out are clear. The bit that's difficult is to understand really why that's the case. My instinct is that that's for a combination of reasons. The first is the regulatory, which I touched on in my previous answer. The second is changes to the macroeconomic climate post-COVID, which have been significant. We all understand the economic difficulties of that, and banks feel that like everybody else in the economy. And so I'd say that those two things combined may well have contributed to those numbers going downwards in the way that you set out.
And it doesn't sound as though there's going to be enough happening this year for that to have shifted by the end of this year.
I'm not sure about that. I think that broadly, when you look at the data over the last, even over the last 10, 15, 20 years, when the economic climate improves, there broadly is more demand for finance and there's more lending that follows that demand. I think the economy, and this isn't about the wider economy, but just to make the point that if the economy improves as we hope it will do this year, then those numbers will start to increase.
Well, this data, just to be clear, this is people who've decided they do want the finance, and it's their success rate in obtaining that finance.
Yes.
So, okay. Stephen.
Economic Secretary, good afternoon. Thank you for coming to speak to us. Can I ask you a little bit about how you see the Basel III changes that the PRA is proposing will affect SME lending? As you're aware, they are proposing some further changes in terms of the treatment of exposure of SMEs, a new corporate SME exposure. I guess I have two broad initial questions. Firstly, the governor, when he talked to us about this, said he thought the proposal to remove the supporting factor was an acceptable balance. I wonder if you could tell us what the Treasury's view of the plan to remove the SME supporting factor is, and do you think that the proposal is an acceptable balance or is an appropriate balance looking at implementation?
I was wondering who was going to ask me first about Basel III, but Stephen.
You know I'm a nerd on these things.
It does not surprise me at all because your deep knowledge and understanding of this area. So what I'll start by saying I was in the US a couple of weeks ago, and I was surprised at the extent to which there was an open public debate. I don't mean just amongst politicians and regulators and bankers and things. I mean a public debate about the impact of Basel III 3.1 on the lending climate to small businesses, to underprivileged communities, etc. And that debate here is a more insider, closed debate, but it's a debate that's very lively between the Treasury, PRA, and banks as you and Parliament as you have set out. I think that the Treasury and I myself have made very clear to the PRA that it is a matter of priority that we support the lending of finance to small and medium-sized businesses, and that we should be very careful to make that, if that is going to be made harder. The PRA has not finalised its response on this yet, so it's a sort of matter of live debate. But what you should know and the committee should be clear about is that it is a real priority that we keep this. The provision you mentioned, which used to be in the place of the European Union, as you know, that we do not make it materially harder for banks or finance providers to lend to small and medium-sized businesses. That is not quite the same thing as saying that we should keep the status quo, but it is saying that it matters a lot to the government and to the economy that we keep the provision of finance to small and medium-sized businesses as strong as possible.
Thank you. You're right. The live discussion is the insider discussion, and the insider discussion, which I was slightly alluding to in terms of the acceptable balance comment, is this, that there has been a proposal to remove the supporting factor and put in place the new SME exposure class and another mitigating factor, which Sam Woods has laid out. And the issue, I guess, is, do we think that mitigating factor is enough to make sure that the quantum of lending to SMEs will continue at the level we've seen before, or do we think it's going to fall as a result of these changes on the implementation of Basel 3.1 in the UK?
The short answer is we're not sure yet, but it is something that we are looking at. One thing that's worth pointing out to the committee, and it's something that I've had to understand and appreciate, is that when one is speaking to banks, for example, and saying, okay, so what will be the impact of X regulation on your balance sheet, and what does that mean in terms of your lending? You get different answers from different banks because their balance sheets are all different and their internal controls are different and the way they think about things is different. And so trying to get a corporate view from the Treasury isn't always entirely straightforward.
No, that's true, and clearly every bank will take a different risk-weighted asset view on the structure of their lending SMEs, etc. I take all of that. But in evidence that we have had to this committee from one of the major big banks, NatWest, through to a smaller, more SME Finance orientated bank, Alanna, they're suggesting that at a macro level, if we're not careful, this change to the supporting factor could lead to a diminution of 44 billion of finance being available. Is that a figure that you'd recognise, or do you have a similar figure in mind in terms of how it might affect lending?
So I've heard that figure. I've read that figure. It's not mine. But look, the key words I think you said there, in addition to the figure, were if we're not careful. And so I think we should be careful, and we should watch this very carefully indeed.
Yes, I take that point, but I guess what I'm also trying to ask, therefore, is, and that is absolutely not your figure, do you have a figure?
No, because it's very difficult to come up with something that is robust, to bear in mind all the different changes with different banks and that I outlined earlier.
So the Treasury recognises the risk,
but just to be clear, when I was talking about, I do not want you to have the impression that I think X number is okay or Y number is okay. No, I think that we need to make sure that the provision of finance to SMEs, the reason why I'm here and the reason why this committee is doing all this work that you've been doing and speaking to all these people, is because we know the importance of providing finance to SMEs for growing our economy. We know the importance of that. So we don't want to make it harder for us to grow our economy by lending less to them and making it harder for them to access finance. So that is what, from the Treasury's perspective, we are very mindful of.
Right. So I absolutely take the point that you don't think the X figure or Y figure is acceptable, and you also make the point, as I made the point, that in extremis this might be the number. But what do you think? I hear that you've spoken to the PRA, but if that were the number, what would the Treasury's view be to the PRA about what greater mitigating factor might be to make sure that that number did not become reality?
Well, it's difficult because there are a lot of hypotheticals in there. I just think the important thing is the PRA is not finalised where it's going to get to. There's been a huge amount of discussion between the Treasury and the PRA, and this is the moment now where, if we do feel, once the finalised package is there, that there is an issue, then we will be talking to the PRA and trying to understand how we're going to deal with that issue. And I repeat, that does not mean necessarily restoring the EU version of the support to SMEs, but we need to make sure that we keep the provision of finance to SMEs as strong as possible.
I guess we all understand that we've left the EU and therefore we're changing to the UK system. I guess what I'm trying to get at is what is the Treasury's thinking around what might be more mitigation to ensure when we implement the UK-based changes that there isn't an impact on the SME financing sector.
I'm not theological or too rigid about how one deals with the problem if one were to exist at the point when the system is finalised. I think there are lots of different ways you can do that, but the important thing is that we maintain an appropriate balance to, yes, financial stability, recognising, might I add, that the UK has taken a very small c conservative approach on Basel over several years, recognizing that certain other jurisdictions that we compete with, for example, the European Union and certainly the United States, have taken a less small c conservative approach to such capital requirements. And so recognizing those, so it's not just about today or the judgment of this year, it's recognizing what's happened in the past as well, to try and see, okay, how do we make sure we have the right balance and make sure we're not going too far and therefore damaging the provision of finance to small and medium-sized businesses. But it's important not to put a figure on it because it's difficult at this point to know what that figure could be.
So my very sort of final question is one of historic record there, is that under the existing bar SME lending to Basel, was there a calculation in the Treasury of what level of support was needed?
I don't know.
I wonder if you could ask your officials and let us know if there is one.
Okay, I'm happy to come back to you. I don't
That's
know.
That's fine. Thank you very much.
Yeah, and further to that question, if I may, just what I heard, I think, was that the Treasury and yourself don't want to end up in a situation where we're non-compliant according to Basel, which is what they've said about the European Union. What if you end up with the US also taking the decision to be non-compliant and the UK is the only sort of major jurisdiction that has decided to be compliant? Is that something you'd be happy with, Minister?
It's a very interesting question, and I think that it is very difficult to have these international agreements if lots of our competitors are not keeping to them as strongly as we are. But I'm hopeful. One thing I did hear in the US was from regulators in America was that they were quite keen to be compliant materially in a range of different ways. Though in the US, they have their own system, they have their own political and regulatory challenges, as we do, and they're not at the point where they've presented a final proposal. But I got a very strong sense that from a US perspective, I can't speak for the EU, that they are keen to take a more British approach in that regard, because they know that it's important. Capital requirements being at the right levels is really, really important. And these numbers aren't plucked out of the air. They're done through a huge amount of work with very clever people spending a lot of time trying to think about what the right level is. And I think that, I hope that we get to a point where, broadly speaking, on capital requirements, the UK, US and EU are broadly in a similar place materially, because that way you're competing on the right things rather than competing on in ways that might lead to financial stability problems down the line, whether that be it could be decades from now. But I think that getting to a point where all of the jurisdictions on capital requirements are broadly in a similar place is where we'd like to be. And we can't control other jurisdictions.
Angela.
Thank you very much. Minister, just want to ask a few questions about dispute resolution, because we had Mark Grimshaw in to see us, and I think we all found it quite frustrating. I think that hearing, and I described the system after he'd given us some of his opinions as if it sounded like it was run by the banks for the banks, and this is because the eligibility criteria to qualify has been set so tight that a lot of the small businesses that have problems aren't able to enter the scheme. What are your observations about it, and does the Treasury have a view about whether these criteria are too tight?
Well, it's difficult, right, because you've got we shouldn't forget the Financial Ombudsman Service is there and covers, I think, and you'll correct me if I'm wrong, Alanna, I think it's 99% of small businesses. So you've got 99% covered there. You then have very, very big businesses who are not the ones the subject of today, but they have their own arrangements and they take people to court and they have they're very, very big. And then you've got a very small number of businesses that don't fit either in the Financial Ombudsman Service, or FOS, should I say to shorten, from FOS, or are very big. So it's not a huge audience anyway. And as to my view, it was set up, I think, by 7 participating banks. It's run privately. It's not, the Treasury does not run it.
No, I wasn't accusing you of running it, but
I know.
It's likely that it's going to close in 2024, having dealt with only a very small number of the complaints that came about that caused it to be created in the first place, and the observations of those that have been denied access to it, that have disputes, is very much that it's been set up by the banks, run by the banks, for the banks, and it's not really resolved very many of the disputes that it was set up to deal with.
Look, if I'm not here to defend or to condemn the BBRS. What I will say is that it's important that if the banks run something like that, the people who go to it have trust and faith in it. And if they don't, then I think it's up to the participating banks to change it in such a way that they do. But that's not something I think that I can impose from the Treasury, nor would it be appropriate for me to do so.
Does the Treasury have a view on whether the resolution service should close in 2024?
No.
Would you be happy for it to close?
No,
because
it's
likely
not up
to
to
close.
me. It's not up to me.
Okay, so there are 55,000 SMEs who are above the turnover threshold for the Financial Ombudsman Service who won't have a dispute mechanism if they fall out with banks, if the resolution service closes. Would you be happy with that? Do you think that it's right that for that number of businesses their only option is essentially to suck it up or go all the way to the High Court, which will be prohibitively expensive and not a practical proposition for a lot of them?
I would not, of course, not be happy with a position where people don't have access to a simple dispute resolution service. That's not a good outcome for anybody. And going back to the economy, where I started at the beginning of this session, that's not good for the economy either, because it stops people taking risk, it stops people taking finance, right? So that is not a good outcome. But there are all sorts of other ways of skinning that cat. So, for example, and I should say for the record, I happen to know about this because my wife is a commercial mediator, so I happen to know about that, and I should put that on the record. But there are all sorts of other ways of alternative dispute resolution that I think should be signposted, should be made available, in addition to the BBRS or anything that may in future replace it if that was what the sector chose to do. And I think that we should always make sure that there is provision for appropriate alternative dispute resolution, because that is good for the economy and good for the sector. So I will support any industry initiatives to make that work better and encourage people and businesses to use broad alternative dispute resolution mechanisms that are available to anybody in the economy.
Should the government establish an independent body to handle dispute resolution for firms that are over the FOS thresholds and too small to be able to finance large expensive actions in the High Court, which is currently their only choice?
As I said, it's not quite their only choice, though I recognise the difficulty.
Are you suggesting that somehow a small company that was above the Financial Ombudsman Service threshold should try to get the bank to agree to go to arbitration? I mean, that would depend on the bank wanting to, and if the government's hands off, why should it?
Look, so if you look at the architecture here, you've got the FOS with the 99%, you've got the very big companies go to court, as you say, you've got this 55,000
in the middle we're talking about.
The FCA did do a review on potentially expanding the remit of the FOS. I think it was last year, though somebody correct me if that's wrong, and they chose not to expand the remit. Now, I take from that they didn't necessarily feel that the argument to expand it was strong enough. It would be the obvious way in which you would do that if it were necessary. They chose not to do that, so we're in the position that we're in today. And I think that we'll keep under review how it's working. But I repeat, if the sector sets up a resolution service that doesn't have confidence from the people who it's meant to be resolving it with, then that's a problem, and the sector needs to work with them to do that. But that's not something that's
you're
being
very
run from
government
Treasury.
hands off. You're not interested in facilitating an agreement on that. You're quite happy to have this gap persist. That seems to be what you're saying to me with your answers to the questions I've asked so far?
Well, I think that it's more a case of we've looked at, well, now I say we, the FCA have done a very detailed review, and trust me, they are very thorough.
We see them in evidence, we know how thorough they are. I'm asking what Treasury's view is.
Well, what I'm trying to say is they've looked at whether it is desirable to expand the remit of the FOS that has, covers 99% of the businesses already. That would be the obvious place if there were to be something from a government perspective, and they chose not to do that. So we are left with the situation we're in now, and what I think is the best thing to do, and this I don't know whether this is a Treasury view, but this is just my personal view, is we've got to make sure that what is there, rather than set up new things, what is there works as effectively as possible. That is the best way to move forward. And indeed to highlight, working with organisations, independent organisations that support small businesses, and particularly the 55,000 that you've mentioned, working to highlight all sorts of alternative ways that we can resolve disputes with banks as well.
Well, what alternative ways? There's a gap. I mean, at the moment, once the disputes resolution service closes, which is going to be imminent, there is a gap. And so the only choice that a small business that feels it's been very badly treated by a bank has is to go to the High Court, which is prohibitively expensive. There's no incentive in a system with a gap like that for the banks to do anything about it. The government hands off, as you've just explained, so that gap persists. And you're happy with that?
Well, what I've said is I think that we need to try and make sure that what is currently there, the BBRS currently, works as effectively as possible.
Just about to close.
It works as effectively as possible, and the banks working with small businesses, the government, so the philosophical answer to your question is the government doesn't always have to intervene at all circumstances when anything goes wrong. If things have gone wrong and people have been poorly treated, it hasn't been covered properly, I think that we do need to call on the sector working with small businesses to take responsibility to making sure that works more effectively. So I suppose that's my answer to your question.
Okay, well, I mean, that is fairly clear. Would you tell me the role you think that the British Business Bank plays in providing finance to SMEs?
It's a really important role, and I think the British Business Bank, from the top of my head, has supported British business to the extent of about £12.5 billion or something since its establishment. It's supported business in a range of different ways. It's got really innovative, interesting, new, world-leading things like the Future Fund as part of it. It supports them with equity. It has British patient capital sitting sort of underneath it as well. It plays a really, really important role, I think, and we're very lucky to have it as an institution. And that's not to say everything about it is perfect, far from it, but I think it's important and it does good work. And what we should be doing is seeing how it can improve the work that it does, particularly around the provision of equity finance to fast-growing businesses and supporting other businesses who are maybe less fast-growing in other ways as well.
Thank you. We received 120 evidence submissions for the inquiry, but fewer than a third of them mentioned the British Business Bank at all. Mm-hmm. Are you concerned about the awareness of the capacity that exists in the British Business Bank supporting small businesses? Are you concerned that it seems to be not very well known?
I think that is a fair criticism for certain aspects, in some sectors. I think that's clearly the case. And, it's very, very difficult, right? So if you take different aspects, one thing that I didn't mention, I think they call it the finance hub and sort of signposting and information. And there has been a complaint from many small businesses that they don't feel that they know where the information is. They don't know what type of bank to go to. They don't understand what type of finance they might need. And they need advice and support. And the British Business Bank, though it provides that service, can definitely highlight it more. But I would also highlight things like the Chambers of Commerce. I'd also highlight there are all sorts of other institutions in the country that also can help provide information who are also not very well known. So the short answer to your question is yes, there are areas of small businesses that don't appear to know the British Business Bank very well, and we need to help them get better known.
Okay, the loan schemes that the British Business Bank maintains, especially coming out of CBILS and COVID, do you think that these ought to be extended, the recovery loan scheme, beyond June 2024 when it's due to exit?
Well, I think the work the recovery loan scheme has done has been really significant, very, very positive. I think for every pound that has been spent, we've generated £4 of positive economic growth and activity. I think it's great work. It's very important. And it's served a purpose over a difficult last few years in economic terms that the committee and the committee and the whole of Parliament will appreciate. And, it's done very good work so far, and we'll see what happens.
But all of our witnesses, including the CEO of the British Business Bank, have argued in favour of extending the recovery loan scheme. So will the Treasury be committed to extending it?
I'm not going to commit to that today, but what I will say is that we recognise the importance of the work that it's done, and that point has been made by many different people and institutions at many different times, and that's fully recognised by me and the whole department.
Are you hinting perhaps that there might be an announcement in the budget?
I'm not hinting anything. I am not subtle enough to hint. But what I will say is I recognise the good work that it's done.
And you'd also recognise if there was uncertainty with announcements not happening as June arrives, that creates a great deal of uncertainty for those that rely on the recovery loans. And so perhaps March might be a good time to make one of those announcements.
Well, uncertainty it can be difficult, but it has played a very positive role over difficult economic times, and we're coming to a point where the economy, I think, hopefully this year will improve, and so it has done a good job thus far.
Okay, I just wanted one more update, which is on the Greensill capital loans that the British Business Bank made. When last heard of, the 400 million of loans that Greensill Capital made to companies linked to Sanjeev Gupta had their guarantees suspended, but there's been litigation in Germany where the bank was, which advanced the loans, and the person who's trying to deal with the collapsed company is suing for return of the money. Does this have implications for the British government which lent the loans in the first place? Is there an update you could give us on where we are?
I can't give you an update on that, but I will write to the committee and give you an update in detail on that, because I don't know the answer to that.
And is there a final position on the amount of fraud in CBILS which the British Business Bank handled during COVID? Do you have a figure for that you could give us?
I don't have a figure I can give.
It's like Alanna.
I do. So it's 0.02 billion at the moment is the figure on CBILS fraud.
0.02.
What's that in millions then?
So that'd be 20 million.
20 million.
20 million.
Okay.
But that clearly doesn't involve the guarantees that were given in Greensill, so I'd welcome an update.
We will give you an update on that.
Thank you.
Thank you, Angela. John.
Thank you, Chair, and welcome, Economic Secretary. Can I just turn to what more perhaps the government can do to better assist businesses accessing banking facilities generally? You rightly said, and you rightly recognise the importance of SMEs to the economy, the importance of finance, but I put it to you that last year something like 140,000 business bank accounts were closed, often with no notice, explanation or recourse. There is a feeling in the SME sector that banks tend to, if anything, be anti-business. We've had figures suggesting that 2/3 believe banks are less willing to lend them today, and this increases further for SMEs with lower turnover. So access to access to business bank accounts is terribly important. What are you going to do to try to turn this round?
It's a very important point. SMEs have made the point to me. I feel strongly about it. I think it's really important that banks are always straight with people about what's going on. And, and that's, by the way, businesses as well as individuals. I know we're talking about businesses, but I think that it's of critical importance, and it definitely frustrates me when I hear these stories. When I've spoken to the industry, what they've said is that, broadly speaking, where bank accounts have been closed, it's for two principal reasons. One is a perceived financial crime risk, and the other is the lack of information being provided upon request. Now, taking that as read, I can think that the perceived financial crime risk, I think we all know, is very serious, and all of us take that seriously. But I suspect the majority of the closures are the lack of provision of information. And I think that is something, well, I know it's something that I've spoken to UK Finance and and the banks individually themselves about, which is we need to make sure that we are not inadvertently or deliberately closing accounts unnecessarily for businesses that may just not have opened emails at the right time.
Well,
I think that so the answer is, what am I doing about it? It is twofold. One, having conversations like the ones I'm having, saying, I am hearing these stories and you've got to act. And secondly, going back to something I said earlier on in the session, one thing that definitely does come from the banks is that the regulatory requirements that they are under and the severe problems if they are seen to breach any of these requirements, particularly money laundering regulations that come in terms of financial crime, which affect certain sectors of business rather than others, particularly businesses, for example, that handle a lot of cash compared to others that don't, sectors that don't, making sure that those regulations, and I mentioned the money laundering regulations, are simpler and easier and less onerous, because otherwise you end up with the scenario where legitimate, decent business owners their lives are made very difficult, and that's not good for the economy, it's not good for them, and it's frankly not good for banks if they do it, because it damages their reputation.
I'm pleased to hear you say that. It's certainly not good for the economy. I mean, it seems to be a scenario, once again, where we're coming back to the regulators who may be over-regulating, and the banks reacting to that.
Yes.
And it's the poor SMEs and customers at the end of the line who are having to pay the price. I mean, you've got a planned consultation into debanking going on. I mean, can you just update us on progress with regards to that? To what extent will it also look at SMEs?
So it's my understanding, I think, that the FCA is doing further work on the back of what the Chancellor commissioned in relation to this. And we're working, they are doing the work, and we're in touch with them on it, and hopefully soon we will have an update that we can share.
And the bank and the Treasury is not doing its own consultation on this, or
I don't think so.
Threshold conditions.
Yes.
So we are doing on threshold conditions and account termination rules.
Right. So in other words, you are looking at this,
yes.
And this will, and within that scope and remit, there will be SMEs featuring large.
Yes. Because that applies to individuals as well. When I was saying that the FCA is doing work, it was on the Chancellor commissioning it in relation to specifically.
I'm aware
of
that, but I'm also aware, or I thought I was anyway, and you've now confirmed it, that the Treasury itself is actually looking at this issue, which I think is very welcome. Can I come back to this business about banks overreacting? 140,000 accounts closed last year alone is a very large number of accounts. I can't believe that all of those are cases of smaller business people not responding quickly enough. And there's often no recourse, very often no recourse at all with regards to the closures. I mean, we've heard evidence from various sectors, Amusement Machine, Pawnbrokers Association, various others, who state in evidence to us that banks often blacklist and withdraw services from businesses and sectors like theirs because of worries about money laundering. which they would maintain, particularly when it comes to amusement machines, is a little laughable given the size of the prize and so forth. I mean, do you actually philosophically almost believe that the Treasury, or do you believe that SMEs have a right to banking services, whatever their business, as long as it is legal?
I do believe that SMEs have a right to banking services. Yes. What it is not up for me to do is to tell any particular individual bank that they must bank a particular company, and that's the difficulty. What I hope we are going to see very soon in the market, a bit like when there was an issue several years ago about the lack of provision of finance, and you had a rise of alternative lenders. What I'm hoping is that particularly other new institutions seek to take the great business opportunity of taking on businesses who, because of the risk aversion, I would put it this way, gently, amongst some in big banks, feeling that banking certain sectors may be risky from a money laundering perspective, and they just say, well, they decided they made a business decision that they think that is maybe onerous unless the businesses are of a particular size. You mentioned the size being relevant in relation to closing the accounts. And I can see certain banks maybe doing that. It's not up to me to tell those banks to change their business strategy, but I think it's up to us, it's up to me and the government to make sure that we have the conditions where alternatives are provided that are serving a good purpose in terms of people having access to bank accounts. Because SMEs definitely have a right to be banked as long as they are not doing illegal activity or are suspected of such. And that is absolutely critical, a bit like individuals have a right to be banked.
But Bim, you see the problem here. Government does have a role when it comes to setting regulations.
Of course.
And arm's length regulatory bodies take that on board. The steer comes from government. The trouble is, at the end of the line, it is the individuals, and in this case SMEs, who pick up the tab if banks overreact. And yet what I think we're saying is that that's a purely commercial decision at the moment. I mean, do you think there's a bigger role for government to actually ensure that all businesses have enhanced rights to a bank account, if only to encourage banks to think again before taking this rather arbitrary action of simply closing accounts, often without notice?
I mean, it's an interesting one, and it definitely makes me think that you, John, are calling for an enhanced role for government, which is interesting.
In certain cases, if it's defending,
I know. I'm only teasing you.
I know you are.
So this is what I think. I think that the best way to make sure that people are banked appropriately and properly is to make sure that the regulations, and particularly the application of the regulations when it comes on the financial institutions, are proportionate, simpler, and easier to do. And that has not been the case for too long, and that's something that we are actively looking at. It's something I'm very committed to, and I've made numerous decisions and speeches and comments to that effect, and I will continue to do so. That is really the best way of doing it. The more almost fundamental point, though, is should we get to a position of saying to every single bank, you must take on any business that satisfies A, B, or C basic requirement? I don't think that's what government should do. I don't think government should be mandating to a business, you must do that, because I think that is overreach. What we should do, not just the regulatory requirements, not just the broader economic environment, not just the parliamentary, or rather the primary legislation environment. We need to make sure we provide the right context for the right competition and the right providers to take a fantastic business opportunity. Let me just finish by saying this. Silicon Valley Bank, the difficulties of Silicon Valley Bank, which were resolved over about 72, sort of 84 hours, over the best part of a weekend, that there were lots of people saying, oh gosh, well, what's going to happen to all of these people who bank with Silicon Valley Bank? And what happened was you had a very big bank, HSBC, that took the decision because they saw in addition to being good corporate citizens and wanting to help, but they saw a great business opportunity of lots of quite small businesses often that they previously weren't banked with, that didn't, who they didn't really know, and they've taken on, and it's frankly a business opportunity as much as anything else. And so there are great business opportunities in that 140,000. And I think that the market will find its level and will make sure that they are properly dealt with as long as the regulations are done right. And that's where I come back to, and that is the role of government.
And that is the logical consequence of what perhaps you and I are agreeing, and that is we don't really want government to get involved in commercial decisions at the front line. But if that is the case, we must make sure that the banks are do not have any reason to overreact to the regulations.
I agree.
So the government's focus should be making sure that the regulations are commensurate with the task in hand and they're fit for purpose. And I'll share with you, Minister, there is a strong feeling that actually we're over-regulated and it's leading to consequences. One final example, and then I must stop. Reputational risk. The FCA itself has concerns about banks using reputational risk as a reason for account closure. I mean, do you share that concern? And do you think that the FCA should tighten the definition of reputational risk so firms cannot use it as an excuse to close bank accounts?
I do think it's a concern if that's what's happening, because once you start doing that, then you go down a road that's quite problematic. But what is mostly happening, I don't think is that. I think what is mostly happening is a fear of a knock on the door from the regulator.
So the government's focus now is going to be on getting the regulation right.
Yes, and not just the regulation around money laundering. It's about, if things go wrong, how the regulators deal with the industry and making sure that that is not too onerous, too aggressive, because it's the experience of that means that the next time that institution doesn't feel that it even wants to go close to a particular sort of institution. And I think that would be a mistake.
All right, thank you very much.
No problem.
Thank you, John. Can I just clarify, because I think I'm actually more confused than I was at the beginning about the work that's already been done on debanking by the Treasury, by your predecessor, by the FCA. Did that cover exclusively personal bank accounts, or did it cover business bank accounts as well?
So the account termination rule changes, so extending the notice period to 90 days and giving a clear reason except where it be unlawful to do so. That applies to business and personal accounts, and the department's going to be publishing regulations soon. So covers both.
Business of any size is going to be covered by these new regulations that you will be publishing soon. We will look forward to seeing that. Therese.
Thank you, Madam Chairman. Just building on that, it seems that there are kind of necessarily banks not having particular tastes for certain kind of businesses. So the written evidence provided by the National Pawnbrokers Association refers to what they call the letter of death from banks, normally gives 30 days closure. It sounds like this will be changing to 90 days. But they suggest that in 9 years and closure of more than half of their members' accounts, there's not been a single occasion when the bank has reviewed the closure and changed their mind.
Wow.
So that's written evidence given to us. I think the other thing where kind of coastal, or not exclusively coastal, but BACTA is the trade association in the music machine sector, and again, about 30,000 people employed in the industry, and largely SMEs, but as they have their own concerns about the closure of high street branches, concerns about then the restriction of what can be put in post offices, and some of the risks in terms of handling quite so much cash. So in terms of thinking about consumer access to cash and back branches, which we've done a lot on, including I've already called Barclays shameful and shameless in this committee, and will continue to do so. But are we forgetting the role that branches play for SMEs?
Very good question, and I think we're in danger of doing so. And I think that bank branches don't just play a purpose for individuals. They play a really important purpose for SMEs. Banking hubs are a really good innovation which developed over the last few years as a way of making sure that there is access to cash in areas where you used to have several banks and there isn't the need for them because the drive online has gone so fast. But making sure that there is a hub where banking can take place. I was actually at a banking hub on Monday in Cumbria, and speaking to the members of staff there and talking to them and customers about the importance that has to the local area is really, really important. So I completely agree that SMEs, particularly those that use a lot of cash, and I refer, when I was speaking to Mr. Barron earlier, SMEs that use a lot of cash are sort of facing a double whammy. One hand, you worry about the letter of death, as you put it, from the bank. On the other hand, you worry that you don't feel that there are fewer opportunities for you to put your cash in a local bank. So I think that we are in danger of worrying of forgetting that. I am not forgetting it, but it is something that I speak to the industry about frequently. The making sure that we roll out banking hubs faster is absolutely critical, and making sure that we have working with Link Cash Access UK as well to do that in a way that helps support isolated communities, isolated parts of the country where banking services have fallen away.
It feels like the government has delegated responsibility for access to cash to the FCA. Is Treasury monitoring the impact of the loss of bank branches beyond just the access to get to an ATM to take money out?
Short answer is very closely.
Okay, that's good to know. So in terms of...
I'm sort of slightly obsessed by bank branches because I...
With mine back then.
Anything for you, Dame Angela. What the reason why I'm obsessed by it...
There's one in Leiston, Minister, that needs saving.
Okay, good. That's fine. You bring in your orders here. No, but the reason why I'm obsessed by it, and this is, I think, is really significant. Access to cash is really important. That's why my predecessor, the member for Salisbury, when he was in post, was very hot on this when he was in this position, and I'm sure members of the committee remember. It's absolutely critical, and that's why we've legislated for it. But in addition to that, we need to make sure that where the commercial decision is that so much has gone online so fast that there isn't a need for bank branches, and we need to be honest about that, that banking hubs in the right way are brought quickly so that there isn't a gap between all the banks leaving and then a sort of vague promise of something coming in the future. That isn't good enough. And so shortening that to make sure there is no gap, which is where we are now, which is the policy from how the industry is operating, is critically important. I would just take up only on a tiny thing that you said in relation to delegating responsibility. I don't see it like that. I see it more as the industry is a private industry that the government it does not run. But what we've done is we set a framework, and the FCA's job, as they've done recently when it comes to access to cash, is to implement that framework and working with the industry to do that. But what I can do is make it very clear to the industry that this is something that matters, and it matters to members of Parliament, and it matters to people. And that's why access to cash and this whole area of bank branches is really important for SMEs, particularly those that handle a lot of cash on a day-to-day basis.
The government's response tended to be go to the post office, and we know that banks have different rules. Do you think it is the appropriate default solution? I'm really encouraged by what you've just said about hubs, because, again, an area that's just about to lose its last bank in town, a particular branch, Barclays, the nearest one is now about 40 miles away, yet that town has been turned down for a hub more generally. So I'm interested to see how you are going to get a grip of that.
Yeah, I'm very happy to talk to you about that because it is an area that is of real importance, and I know that many colleagues across the House feel very strongly about it.
So if you find that the FCA solutions, I appreciate you're saying they're not delegated, but they're helping install the framework of the government, do not end up providing the access to services that SMEs require, will you think again then about a cash deposit network that can cope with cash depositing and access on a commercial basis?
I mean, let's just see where we get to. I think that the statement the FCA made recently in relation to this was helpful. The banking hubs, as I say, the industry, I think, has understood the desire to roll out the promised banking hubs as fast as possible. Link and Cash Access UK are also very appraised of that. So let's see where we get to. I don't want to sort of get ahead of myself. Though I often find that a bit difficult.
Small Business Minister Kevin Hollenrake.
I do.
About his specific
frequently
concerns potentially that some of these hubs are overspec. But one final thing, at the moment, through the new rules, which are welcome, the FCA does review when a bank says they're going to close down. Those documents, either what gets submitted or indeed the FCA's assessment of them, are not open to the public to look at. Would you like to open? Do you think that they should be transparent?
I don't know, and I didn't realise that.
Would you like to think about it?
I'm happy to think about it. I mean, the question is really one of making sure that the right decisions are made on clear criteria. I don't know if transparency always is the silver bullet people think it is, but I'm happy to look at it.
Thank you.
Thank you very much. Anne-Marie.
Thank you. If I may,
of course you may.
The access to cash issue is one that I share. I have some passion that Dr. Coffey has, because we have coastal constituencies, and those coastal constituencies are very cash-based. And therefore, for my SMEs, I have very similar problems and experiences to those that Dr. Coffey has. But let me ask you this. The question which was asked by Dr. Coffey was, is there enough focus on the needs of businesses? And you said, could do better. Having talked to the different business groups, it seems to me that only the FSB have been involved and consulted in what the rollout looks like. So the chambers have not been.
I didn't realise that, forgive me.
So I think it is important that government actually works with all of those bodies that represent businesses. The second thing I would say is that this, and I love the word delegation, it's kind of delegation, abrogation, no, says BIM. But effectively, the government has set the framework, and then it's let the banks kind of get on with it. And in a sense, because the rollout started with some guidelines before the FSA rules, which are still not in place because they're still consulting, came in, you've got a bit of a patchwork quilt of experience. It seems to me, Minister, and I'd put this to you, that because all of the parts of that framework are controlled by the banks, it's quite hard for government, never mind the FCA, to actually ensure there is some control and some proper balance to make sure that the right decisions are being made. So, Link, it is regulated, but owned wholly by the banks. Cash Access, wholly owned by the banks. The consequence of all of that is that it is the banks that decide with regard to establishing the hubs, what size they will be, how much money they will invest in them, the services that they will offer. It seems to me that if the government and the FCA, and maybe the FCA after the consultation, will do more in this space. But I do worry there is a bit of a conflict of interest here, because of course I appreciate that for banks they didn't want to land up with a lot more freehold than they had before. One of the reasons they're cutting the cost. But the sort of constraints that have been set for these hubs, it's 1,000 metres, but if you can't make that there is one hub which is in a public lavatory. Now,
Really? Where's that?
yes, I can send you the detail later, but it seems to me that a figure has been set, a budget has been set without any recourse to what does that mean in practice. So because they have to be leasehold, not freehold, because they have to be 1,000 metres or less, it has led to a lot of constraint. And that is partly why we have, I think it's 30-something which have been rolled out, which is very good news, but there are another 100 plus still waiting. And from what I can see, there is absolutely no way those are going to be rolled out and for the benefit of SMEs or domestic consumers in the time frame which is set, which is after a bank closes, it will be 12 months. It simply isn't going to happen. And so I will put it to you, Minister, that there needs to be more government as well as FCA oversight about what's going on, because if the rules are entirely being made by the banks, because they're the ones that decide how much is spent, we're going to land up in a big muddle. Would you agree?
I think that the first thing that you said about not involving other small business institutions, organisations, should I say, like we've involved the FSB, or rather the FSB is sort of consulted and nobody else is, that's something I will definitely take away. I did not realise that. So that's something I'll take away. The second point, what is the role of government here? It's a partly philosophical but also practical question. It's important that we don't get to the point where government ministers, much as I would be tempted to enjoy this, government ministers determine exactly where in the country bank branches will go. That is not a sensible way to govern an industry.
I would agree with you, Minister, and I wouldn't want you to do that. That is not what I'm asking.
No, I know that's not what I'm presenting slightly a straw man to make my point, right? Which is, it's important that we don't get to there, and that there isn't even the perception that's where we want to be. But it's also important that we do not just have absolutely no rules at all about access to cash.
Oh, absolutely.
Okay. So really what we're talking about is where the balance lies in between these 2 points. It's my view that broadly speaking, the issue we have is less about the overarching framework, though I do take the point about, the 1,000 metres and the detailed criteria. We should always consider those and work with the industry to make sure those are appropriate. Because, of course, the technology that's driving all of this is itself changing. But it's also important to recognise that the individual's use of online banking is different from the use of certain SMEs in certain sectors as well. So where does the balance lie between these? I think broadly speaking, we're in a sensible position, which is we have a set of rules that it's up to the industry to perform to in that regard. The FCA does its work at a more detailed level as well. I think that's broadly the sensible place to be. Where I'm frustrated is the speed of rollout. I am frustrated about that, and I do think that needs to be, you mentioned that, there's 100, that needs to be as fast as possible. It's worth saying, because I've questioned this, and it's worth saying when I've sort of said, well, what's going on? The answer being difficulties around planning in town centres is significant. Difficulties around timings of when leases become available is also important. So it's not just a sort of lack of money or lack of will. There are often practical difficulties to doing it faster, but those are things that are beyond, not beyond the wit of man to sort out, and we do need to try and sort them out. But what I'd finish by saying is making sure, and what I've taken from this committee, and I'm sure all the banks are watching, if they're not, doing something else, making sure that SMEs are fully considered as part of the broader access to cash discussion and policy making, both at bank level, in the industry and in government. I've taken very strongly from this committee, and I'm sure they will too, and I will in my private conversations with them as well.
Let me then, if I may, Chair. You made actually a very good point there, which is there is a big difference in the way that SMEs and individuals need access to cash. If you are an SME, you need a lot of cash, and you need to be able to deposit a lot of cash. That becomes a challenge because we have different rules for different banks, and there are limits which may be appropriate for a domestic consumer, but they are not for an SME. And I would suggest to you that we need a very different approach in terms of the limits for SMEs. We also need some consistency because of the different banks offering different levels, because they have different views about money laundering, isn't helpful for the small business community. I think I would also say that what businesses want often is for documents to be able to be prepared and printed, and at the moment these hubs are challenged. They can't print documents, can't have one printer that will produce documents for all of the different banks because of the different technologies that are used. That's just for an SME who wants to go in and sort out his bank statements or whatever. That is a real challenge. So, with your indulgence, Chair, may I just ask one more on this before we move to guarantees? One of the things the government wanted to do in the Financial Services and Markets Act was clearly deal with access to cash. But at the same time, it recognised that there needed to be some teeth to ensure that the services that banks normally provide also remain provided, and therefore the government introduced the consumer duty of care.
Yes.
And my concern is that when we are rolling out these hubs, the focus is entirely on cash. The reality is it would be irresponsible for businesses to be left just with cash and no advice. When I talk to banks, their view is that SMEs are now so IT literate that they will do most of their advice online. That is not true for the sorts of business I have in a seaside resort. That needs to be thought through, because it seems to me that the consumer duty has not been properly recognised in the construction of the hubs. And it's particularly pertinent for SMEs, because without that you land up with businesses without the sort of help and support that we were talking about earlier with regard to access to finance. So that needs, it seems to me, to be addressed. I don't know whether you have any comment on that.
I think it's you make some very sensible points, and I will reflect on them and make sure that we that we act on those points where necessary, because it's very, very important that for the health of our economy, for the health of rural areas, for the health of seaside and coastal regions, as we've discussed, that the right SMEs have the right access to cash and services.
Yes.
And trying to, it's important. I don't want you to have the impression that everything is set in aspic. As banking hubs roll out more and faster and things develop, and indeed the technology develops and how people bank online develops, there will inevitably be changes as to how banking hubs operate. The point you made about printers, I didn't recognise. Again, that's the sort of thing I will take away. And making sure that we iron out all those little problems to make sure that banking hubs do what they really can do, if you see the potential of them, which is to be a sort of the 2020s update to what was a long-term legacy system of bank branches. But for that to work, SMEs as well as individuals need to have confidence in it. And I think that's very important.
Shall I move on?
Yes, but before we move on to a different topic, if I could just clarify, because it is our understanding as a committee that it is the Treasury, and therefore I think in your in-tray, Minister, to designate which firms the FCA's regulation of cash access will apply to, and also to designate the coordination bodies. And, I think you're hearing from this committee today that we think that's really important. We'd like to see you do that ASAP, and I wondered if you could tell us when you're going to do it.
Well, I will. I'm going to take that away, and I will consider and act as quickly as urgently soon.
Fantastic. Anne-Marie.
So, if I may, Minister, can we move to personal guarantees and the challenges that certainly a number of SMEs have when they are trying to access finance? Do you feel, because I'm sure your finger is on the pulse, that there is a fair balance between security for the lender and burden on the borrower when we look at personal guarantees and indeed charges on houses, we've had some submissions with some requests for very small sums, £5,000, to support which a personal guarantee was required, as well as a charge on that person's home. What is your view? Do you monitor it, as I assume you do, and do you think we've got the balance right in terms of what sort of security for these small SMEs the lenders can demand?
The answer is it depends. So in some instances, the balance is right because the bank is making a reasonable decision about the risk. There'll be instances where it's not right. And where it's not right, the question is, what do I or anybody else seek to do about that? If the balance isn't right, what I think is important is for us to have enough provision of finance in a variety of different ways, from a variety of different types of lender, that give options to that person that are not solely one of the guarantee if they don't feel that they should, that they're able or willing to do so. But what's also worth saying, and it's not always a popular thing to say, is that sometimes you provide money, you lend money to somebody, or to a business, should I say, and it goes wrong, and the money is lost, because that's the nature of a capitalist system. And it's through that we end up actually growing the economy more fundamentally, because it's through that allocation of capital and understanding where risk lies that over time capital migrates to where money can be made, and the businesses don't survive in areas where money can't.
But Minister, surely, while you talk, if it was a perfect world, as you describe, with all of these options, so that I, let's say, as an SME, could effectively choose and had a lot of choice, and I appreciate that's one of your objectives, but today, I think, if we're honest, it doesn't exist. If you are a borrower and you are a lender, it's a two-way transaction. Both parties are taking risk. Both parties are getting some benefit. The borrower is getting the money to go and build his or her business, but the bank is getting a nice hefty piece of interest. So it can't be reasonable to say that the lender, therefore, because they're lending and taking risk, therefore should have all the cards stacked in their favour. It has to be a balance.
Of course.
So
but the truth is they don't necessarily have the cards stacked in their favour, and this is why. Ultimately, if there is a situation where personal guarantees are being requested, and that SME has no other access to finance, as you said, and I'm not saying that can't be the case. Of course it can be the case. And we spent time earlier on in the session talking about where there isn't enough access to finance, right? So I know that, of course, it can be the case. Then the question is this. If that lender is not going to be willing, because of their assessment of the risk of a borrower, if the lender is not willing to lend it without such a personal guarantee, not willing to lend either without a personal guarantee, or unless the interest rate is jacked up to a point that would be much higher and therefore probably punitive or excessive, then that is really a transaction that both parties just have to consider and think about. It's very difficult for me or any minister or anybody in government to say we're going to outlaw personal guarantees, because I don't think that would be appropriate either, because sometimes it is appropriate. The most important thing we can do is to make sure that there is enough choice and variety of alternative lenders. I think something like 55% of finance lent to small businesses now comes from outside the big five banks. And so this trend is happening. And if you look at the last few years, the data over the last few years, there are more and more people coming into the market. What we've got to do is support that, and there'll be people who don't necessarily offer and require personal guarantees. And guess what? They will maybe be making a very good business decision, and that's where the finance will be provided. And maybe that will force change of behaviour with certain institutions about the instances when they require personal guarantees. But I don't think we should be getting to the place of saying we're going to now somehow ban personal guarantees. I don't think that's the right answer, and I don't think it's the role of government.
And I don't think I would suggest that. But I think there is a question mark, and it certainly has been floated, that there should be regulation which gets this balance right. So you don't outlaw, but you set limits as to whether or not it's appropriate for the size of a loan. There should or should not be a personal guarantee. Because the sorts of businesses I'm talking about are the very small startups, probably one-man band. They probably aren't able to access some of these new, you're right, great opportunity, banks online. They wouldn't necessarily understand or have the knowledge. So it is those very small businesses where it is a very small amount of money for a relatively small project, that simply what you're describing is a world up here for bigger businesses and those with far more experience in the lending world. So I'm thinking about the ones really at the bottom end of the food chain, and I just wonder whether or not there should be some sort of limit, because the sort of recourse these small companies have is relatively small, because the FOS only applies to the sole traders. It doesn't apply to your limited company, and it's often the small businesses that decide to set up as limited companies, and that's when they're asked for the personal guarantee, and that's very often where the challenge is. Do you not think this is something that it might be worth the government getting a better understanding to see whether or not there is abuse? Because we have to remember that the lender is always going to be in a stronger position of power than the borrower, always. Do we need to look at regulation, light touch, I wouldn't ban anything, to actually enable those very small businesses to start trading with that initial start-up loan which they need?
Ms. Morris, you've made a very fair point about ensuring that one is always thinking about the smallest business, because of course that is a significant number of our constituents in our constituencies, and they're the people who send us here, and that really matters. And I don't want to give you the impression in my previous remarks that I wasn't thinking of them. You make a good point that we should make sure there is an appropriate balance for those businesses in particular. I think if I were to paraphrase, you sort of accept my broader remarks for slightly bigger businesses, but what you're saying is some of the very smallest ones you don't think that works for. The Lending Standards Board is reviewing its approach on personal guarantees. I would expect it to focus on these sorts of businesses. It's unlikely to focus on businesses with £10 million turnover, because I don't see why that would. I don't think there's necessarily the problem there, and I can see that the points I was making about the need to provide more options for finance, equity and debt, is easier the bigger you are, because more people are interested in lending to you. But I think that the Lending Standards Board work is interesting. I think you're right that I should keep abreast of it, and I will do so.
I appreciate that. And just one final point, and I'll leave it at that. It isn't just the personal guarantee, it's the charge of security on your own home. And that is quite frightening if you're a very small start-up. That's all you've got, and the idea you might lose the roof over your head for your kids and your wife is quite terrifying. So in the review that you describe, I don't know whether those sorts of charges on people's homes could be looked at as well.
I don't know, and I will check. I'll add one thing, though, because it is, going back to the economy, and without sounding like a broken record, the reason why all of this matters is the economic growth and sustainability of our country. That does not just matter in terms of GDP statistics. It matters in terms of individuals in communities. And one of the difficulties that our economy has right now is a chronic risk aversion, whether it be in regulators, whether it be in government, whether it be with big businesses, whether it be with small businesses. We can be talking about all sorts of different aspects of this. And so one of the things I'm very committed to doing is to changing this dynamic as best I can in the time that I'm in this position. With regulation, there are levers we have. With pressure on industry, and there are other levers that we have to try and change this dynamic. But in relation to finance, one of the reasons why you have personal guarantees requested or security on the home or various other things that seem onerous is precisely because of a worry about what happens when something goes wrong. And why are you worried about something going wrong potentially? Because you, not just from a regulatory perspective, from an economic perspective, the capital requirements that are assessed that come from your head office, if you're a bank manager in Dorset, the capital requirements come from your head office, which have been set over, the Basel process over the last 12 years. Those all cascade down to that person making that thing. And it's a broadly risk aversion that is baked into the whole structure and system. So these things are all entirely connected. And I want you to know that I appreciate that. And in the relation to the smallest type of business, let's see what we can do to loosen that a bit and to make people realise that unless we allow more finance to go to some of the smallest businesses in certain forgotten parts of the country, then we aren't going to get the economy that all of us on all sides of the house want to see.
And it's because we feel very strongly about the access to finance for small and medium-sized businesses that we're spending a lot of time. We have a lot of interest in this. And in fact, colleagues have further questions. So I'm going to bring in John, then Angela, then Therese.
I welcome what you've just said. We are dealing with, it's not just about GDP growth and economic growth, but people's lives and livelihoods at the end of the day. I sense from this exchange, our questioning and your answers, Bim, that you're going to go with your resolve stiffened in taking on the regulators, which is a good thing, because there is certainly a feel amongst some of us, and that they are over-egging it. And you and I have had conversations with regards to this, with regards to the regulators, the FCA, and, for example, investment trusts. But can I bring you back to debanking, just very quickly? Because we've had the Financial Ombudsman Service in, as you know, and Chief Executive made this point that last year they received 360 complaints about debanking from business. This year, in the first half, that's 250 plus. It's increasing substantially. They mentioned in their evidence to us a little while ago that they were working with the Treasury to ensure that everybody understands the appropriate treatment of a business in that situation. Now, in your dealings with the regulators, and I know you're going away now and talking to the FCA, talking to FOS and all the rest of it, can you keep that in mind? And is that ongoing at the moment? And if Alanna wants to come in and help answer that.
In what particular
Well, because we had FOS in saying they're having ongoing discussions with the Treasury in ensuring that businesses we're talking about here, are dealt with in an appropriate manner that befits the situation when a bank suddenly closes a business account. Now, are you conscious of that conversation with FOS or not? And if not, then could somebody look at it to see that it's taking place, given our emphasis on ensuring that regulators need to regulate appropriately, not completely de-risk and make life difficult for the small businesses at the end of the line, at the end of the chain?
I will take that away. Do you want to add anything?
Do you want to say anything about that?
So certainly we've had conversations with the FOS about ensuring whether or not they have appropriate resources in place. They've not raised any concerns about that in relation to debanking cases, and also making sure that they have access to the information that they need when somebody is complaining about their account having been closed, that they can then make some sort of determination, because particularly where the account has been closed perhaps for money laundering or other financial crime concerns, some of that information isn't usually widely shared, and for entirely understandable reasons. So we've been having conversations with them to ensure that they've got systems in place for that. They've upheld about 38% of the bank closure complaints that they've had, which is bank account closure complaints that they've had, which is about the same as their usual uphold rate. And they have also told us that where they receive insufficient information from a bank about why they've closed somebody's account, if someone's complained and they haven't had much information back from the bank, they rule in the complainant's favour because it's considered uncontested. So they haven't raised concerns with us that they lack the kind of resources or ability to
very
deal
briefly,
with those.
you're saying that 62%, the quid pro quo, that is 60, they have held 38 of those closures, but 62 they overturned, 62% they presumably overturned in favour of the SME.
So, sorry, they upheld the claims. So 38% of people who complained were considered in the right.
Okay.
So the other way around.
The other way around. Okay, but still a significant.
Yeah,
It's very significant.
Thank you.
Thank you. Angela.
Thanks. I just wanted to come back, Minister, on the British Banking Resolution Service, because I was quite surprised at your hands-off attitude, not saying the Treasury don't really have a view, because of course the British Banking Resolution Service was set up in order to deal with a slew of complaints that came about unfair treatment for companies of that size. And Philip Hammond, who was Chancellor at the time, suggested that questions of dispute resolution and regulation will be revisited if the British Banking Resolution Service failed to resolve a meaningful number of the complaints before them. They haven't even really allowed most of the complaints to be considered. So don't you think it's about time that what Philip Hammond said when he set up the system is actually revisited, given the dire performance of the so-called resolution service, which has ruled out most of the complaints out of scope?
So I don't think necessarily it's been dire performance. I think that it's regrettable that there haven't been more businesses that have used it. And
they've tried and they've had their claims ruled out because the criteria for using it set by the banks is so tight that most of the complaints that are around and are unsolvable by the Ombudsman Service haven't been dealt with. That's what's happened. So they've set up a system, the banks, that is so tightly organised that most of the complaints that were in the system prior to the setting up of the resolution service haven't qualified for the resolution service.
My point was simply that I've listened very carefully to your questions, and I didn't realise that Philip Hammond had said that, by the way, but I've listened very carefully to what you said, and I will consider it after the committee, because I do recognise that we do need some provision. What I was simply questioning is whether it's government's job to then put in a government to put in a government scheme there. As I say, the FOS was not extended after judgment by the FCA. There is clearly an open question as to exactly what is best to do with this quite small number in overall terms of companies where they have disputes. I'd like to look at some of the evidence more closely myself. I've seen the sort of headline numbers, but I haven't looked at the evidence myself. I'd like to do that and to see what needs to happen. But I've listened very carefully to what you've said.
I mean, that's good, and I hope you'll revisit it, because I think the then Chancellor Philip Hammond actually was trying to say, if you don't sort this out, if the sector doesn't sort it out, if the banking sector doesn't sort it out, then we will have to come back. That was the strong implication of what he said. They haven't sorted it out, and I think it's about time, and I hope you will do this when you review the situation. It's about time that the authorities now come back and say, OK, this hasn't worked, we've got to set up something different.
Okay.
Thank you.
Thank you. Therese.
Thank you. Minister, the start-up loans, I think, have generally been successful, but I'd be interested to get where we are on the latest, and a slight follow-up already, but in particular, does the Treasury monitor how much are invested in women starting up business?
So they have been successful, as you say, and I'm just double checking so I don't get this right. Don't get this right, so I don't get this wrong. Over 100,000 loans have been delivered with an average size of somewhere between, I think, £12,000 and £13,000, and they've broadly been seen as a very good thing. Now, in relation to the specific point you made about female founders and women, just to be clear, almost 70% of loans have gone to businesses outside London, with 40% going to female founders and 20% going to ethnic minority backgrounds.
Is that 40% of the 70% or 40% of the
40% of the total.
Okay. And in terms of, it would be useful to get a sense of what the average loan has been, perhaps to entrepreneurs there. You mentioned earlier about, there's an aversion, perhaps, I'm not saying use that word, but the equity finance. There seems to be not quite so much. Now, an important part of the British Business Bank was the startup, the patient capital, which you briefly referred to. One of the things that I just wanted to get a sense on that, it does seem to be late stage funding and principally into other investors. So how does the Treasury keep an eye on whether it's not just doing what everybody else would be doing anyway?
It's a good question, and I myself have thought about this a lot. So it's not always what you describe as late stage funding. It's often helping to scale up a business. So though that is late in comparison with an early stage business, the value of a lot of equity at the right point of a business in a business's cycle can be really significant, allowing them to make the jump from large business to very large business, or from medium-sized business to large business. So that is very significant. It's one of the Chancellor's priorities to improve the broader environment for scale-up funding. Why did we need to intervene? And so, are they just sort of in the old term, crowding out what otherwise would have been the case? There's always a potential danger of that, but it has been a chronic weakness of the British sort of finance ecosystem that we've been very good at startup funding. We're very good at providing finance to very big sort of household name type companies. They have no problem. But scaling up, moving companies from reasonably large to large, for example, that finance over the last 20 years in particular has increasingly come from outside the UK, and it's increasingly come from the United States, for example. Now, the reason why that matters isn't sort of out of just patriotism or wanting that to come from Britain. It matters because if those companies, for example, want to really expand, if a lot of your equity finance at the right point, or rather at the scale-up point, is coming from the United States, guess what? That expansion happens more in the United States. It means that if that company wants to list, where are they going to think about listing? They will think about listing in the United States. So there is always a danger of sort of crowding out, but I do think that we've got the right balance in that regard. And just to talk about startups and what you might describe as underrepresented groups, for want of a better description, one of the difficulties that we have is that a lot of the data shows that, yes, though there is inequities around access to finance for founders and for people starting businesses, whether it be women or ethnic minorities, what is also the case is there are not nearly as many of particularly women coming forward as there are men. So it's not just the inequities of maybe the allocation, there's actually just a sheer demand problem. And so what we've got to do is make sure that we promote to all people of all different shapes, sizes, colours, etc., that starting a business is really important for them, and that they are able to do that and do that in the right way.
In terms of startup, you're referring to 20% people being BME. That's higher than the national population.
It is.
So that's actually very encouraging, even if 40% obviously is lower in that regard. But just coming back to that patient capital fund that we taxpayers have put money into, at the same time, there's also tomorrow the launch, I believe, of the Women-Led High Growth Enterprise Task Force's report, which was under the chairmanship of Anne Bowden. I think the Minister for Women briefly referred to it when we had her in on another matter. The GEO and DBT have set that up, but one of their principal focuses has been on venture capitalists and how are they going to get more venture capital to invest in them. Now, I don't know what the report is going to say, but have you given objectives, or would you consider, because I appreciate they've been underway for a few years now, would you consider that being more of a proactive element in the criteria that the taxpayer is investing in through the British, through the Patient Capital Fund?
I mean, to think about this off the top of my head, there are a couple of different aspects. The first is that it is taxpayer money. And so this isn't being given as charity. These aren't grants for nothing back. This is part of a fund that we hope, and evidence over the last few years shows, will return to the taxpayer, right? So it's important that we bear that in mind first and foremost. Secondly, I do not support us being... You don't want to apply positive discrimination to what you're doing. I think that would be wrong, but also I think that you then get into very difficult arguments about who you're positively discriminating against and how for and how much. But what I do think we can do is we can, with the marketing, with the signposting, with the advertising, we can definitely be focusing that on areas and of types of person, regions of the country, types of education, who we know are underrepresented. Because if there's an overrepresented group proportionally, they're already so much more sort of in that space that they're going to find out about it anyway. So I do think that you can focus you can target your messaging to groups that are underrepresented. I definitely think you can do that. What I don't want to do is get to a point where you say, right, we're going to have a target that has to be met of X% of the money must go to this sort of person. Because I think once you start doing that, you end up with distortions that aren't helpful.
So I'm not trying to catch you out. It's another department that has led on this. But it would be useful to know if Treasury has been involved in any of the interactions. And you don't need to respond to that now. I appreciate it. I'm not trying to put you on the spot to catch out. But I think it'd be really useful to hear, once the recommendations are out, about how collectively the government might be able to respond, including, as I say, we have chosen deliberately to put taxpayers' money. We didn't have to, and I think it might be worth considering. I'm not trying to be discriminatory in one way or another, but to really understand, we've got leading people on this task force on some of the elements that they face into, and surely the whole point is to try and make sure that government can intervene to help overcome some of those barriers.
No, I mean, so as I said, I was saying that government can intervene in the way that we target the messaging, that we focus our approach and appeal. What I'm saying is I don't think you should get to a place where you're moving to a fully positive discrimination approach. And again, I don't think that's quite what you were suggesting either. So it's really about balance and where do you sit on that. There's been a lot of work on this. I think Alison Rose, and I think she's no longer doing it after she left NatWest, but she was doing a lot of work on this, I know. This report's coming out tomorrow. I haven't seen it. There frankly has been a huge amount of work in this area over recent years, and it's important that we don't just understand that we do, but we also do something about the difficulty. But what I just want to be very clear about is we've just got to make sure that you don't go into a space that isn't helpful, that's distortive, because that can then create its own problems.
Do you hear what you say? I appreciate, Minister, you'll be very busy this weekend ahead of the budget. I would encourage perhaps you request you get your officials to put it in your box for the following weekend. Just
Noted.
have a read. Okay.
Thank you very much. And if I can just raise one quick last subject, which is, what is your view on open banking? And could it be part of
Very
what
open.
is needed to help small and medium-sized enterprises access finance?
It definitely could, and I've done a lot of work. In fact, I think tomorrow I'm speaking at CFIT, the organisation set up as part of the Khalifa, as a result of the Khalifa review, looking at, and I'm going to be making some remarks about open banking there and open finance. Broadly, open banking has broadly been successful. We have, I think, the leading fintech sector in the world other than the United States, and we punch definitely above our weight in that regard, and in no small part down to the work done by the Joint Regulatory Committee, JROC, and others in relation to open banking, and working with the industry to make sure that data is made available in a sensible way that does not, with appropriate private privacy concerns, that will give options to SMEs in particular, and indeed individuals, to get access to finance. I think it's really important. The next step is moving towards open finance. and how can we go further in different sectors to continue along this track, again, not out of some intellectual fancy, but because more open data done in an appropriate way with privacy at its heart, and I want to put that on the record because that matters a lot to people as well, done in the right way can provide huge new business opportunities and huge opportunities in terms of society for different types of person to get access to different types of finance. And I think it couldn't be more important, and it's something that I'm working on very actively.
So watch this space is
definitely
what I should be hearing there. And then my final question is, you were kind enough earlier on to tell us that the debanking statutory instrument is imminent. Can you be more precise as to how soon is?
I can't be more precise, but I will hope to come back to you as soon as I can.
Thank you. Well, unless my colleagues have any further questions, I think we've had a very thorough session on a topic that is clearly very wide-ranging, but one that you obviously are showing a lot of interest in, and this is the concluding session for this inquiry, so we will start thinking about what recommendations we're going to be making, and you've committed to not only replying to this report but also our previous one at greater length, and we
noted very strongly, Chair,
for that. So thank you very much to both
Thank
of you.
Thank you for your time.
Yeah.
Thank you.
Proceeding has ended. The 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 proceeding has ended.